In today's webinar, we are going to be taking a step back from looking at some specific tools, and we're going to be giving a much more general education-focused look at an area that we're all very excited about here at Algorithm for both ourselves and our customers, and that is corporate performance management. So our presenter today is Mr. Dennis Easter. Dennis is a senior business consultant here at Algorithm and is one of our foremost financial planning and analysis experts. So with that, Dennis, I'm going to hand it off to you. Take it away.
Thank you so much, Alex. Thanks, everyone, for taking time out of your busy schedule to spend some time with me this afternoon. As Alex said, we at Algorithm have become really excited about the potential that corporate performance management holds, both internally and then as well as the possibilities that it raises for our customers. And so we had a couple webinars on specific products that fit into the CPM space. And we thought maybe we'd take a step back and give an introduction to what CPM is in order to really help you understand why we got excited about it and see how it can help you become a high-performing company or improve your performance where you're at. So we'll get started here and give you just some really high-level definitions. Now, what is corporate performance management? Or you may have heard business performance management or enterprise performance management. And according to the Gartner Group, and they're the ones that really developed the definition that everyone uses, it's really describes the methodologies and processes and systems that are used to monitor and manage a business performance across the enterprise. And so first thing to know is that it's enterprise-wide, and it's used in forecasting, planning, and budgeting so that everything that you do can be tied back to a strategy, and you can actually compare the results of your company against your strategic plan. Okay. One of the things that is stated as a value proposition whenever you're talking about a CPM system is that it really enhances user productivity and efficiency, primarily because of the use of automation. But more importantly than that, it really combines all of your different data into a single source of the truth and gives you an enterprise-wide lens to look through. Now, some people will think of CPM, and as we talk about this and we look at some of the examples, you'll think, well, that's really business intelligence. Well, business intelligence is really defined as the technology. And so CPM uses business intelligence, and when you get into discussions about business intelligence, you'll likely be centered upon dashboards and possibly some visualizations. So little introduction is really giving you an enterprise-wide lens to review your business throughout the value stream. And so you're going to be hearing a lot more about the term data management within organizations and how it affects the decision-making process. And right now, the standard by which most businesses work within is that they have multiple sets of data, and in order to work with that data and do any type of analysis, it's generally loaded into Excel. And then based upon a power user's ability to really make things happen in Excel. You can build your planning models, or as we had one user work, they had a 120 workbook budgeting system that they had built themselves, and nobody wanted to take that over. Just because of the inefficiency of it and the risk that you run when you are working inside of Excel, because Excel does have its limits. And companies soon find out that whether it's with the budgeting process or whether it's in reporting, they quickly become very inefficient when they use Excel as their main tool. And so we're going to take a look at the business as an enterprise, and we're going to take the example of some high-performing companies and some things that they all have in common as a driver for introducing CPM into a company. So really there are multiple studies out there, and they show some commonalities between high-performing companies. The first thing that they all have in common is that they have a multi-year strategic plan. They've got key performance indicators that they use in their planning, and then as you go down through the strategic plan to the operating plans and then the budgets and analysis, those KPIs flow through the entire process. The second thing that they do is that before they prepare their financial budget, they use driver-based modeling. And we'll get into this in a little bit, and we'll look at one of the models that is common for our friends in the manufacturing business, the manufacturing industry. And that's really the use of drivers, and drivers are, of course, those components of the business that as they change, they affect other parts of the business. We'll get into a deeper discussion of that here in a little bit. Now, what they do then is those high-performing companies will use that model, and they will feed that down and use it as the basis for creating not just their financial budget, but also their operating plans at a departmental or even divisional or line level. And then once those operating plans are in place, and you look at what we call the execution and management loop, where you execute, you report back on it, and you're analyzing the actuals back against the plan. You look at it, they make adjustments, and then they move forward. And then again, it's all tied back to strategy, and the strategic plan and the KPIs are visible throughout the organization. So you really develop transparency and a way to collaborate from top to bottom and then have a feedback loop. And so what we wanted to do is we wanted to be able to help all of our clients move into that area, those areas that help them become higher performing organizations. So as we look at the areas that are specific to CPM, the strategy development has a lot of parts to it that are really internal analysis of your quantitative abilities and your qualitative abilities. And then when you get down into the modeling, you start to use those drivers and look at the operational level of your business. Okay? So we'll take a look at the model here. And I can see it pretty well on my monitor, but I've got a really big one because I'm old and my eyes are getting bad. So I'll talk through it. What we start with here in this model is a sales forecast by SKU or by a product group. And that product information is at a granular enough level that we can associate it with production requirements. And so the production requirements that we're primarily interested in are the cost drivers, so labor, overhead, materials, but we're also interested in the timing and the quantities that we're interested in producing. And so that's how you see that sales forecast feeds into a production plan. And as we run the sales forecast through the production plan, just like if you're familiar with material requirements planning, it tells you how much of the components you need to buy and when you need to buy them. By running your sales forecast through this production model, what it does is it tells you how much labor you need or you're going to absorb and when you're going to absorb it in order to build to meet your sales forecast. And then you're going to also be able to have the overhead components and materials calculated as well. And so at that point, you really have the ability to say, I know how much my material costs are going to be in my overhead. And so if I take my labor requirements and I feed them into the third step, my personnel model, I can find out what my manufacturing labor requirements are as well. And at that point, if you think about a financial statement, you've started with your sales forecast and you've come up with your revenue numbers. Okay. Now, by running, and pushing those numbers through your production model and the personnel model, now you have your labor, material, and overhead so that you can draft out your cost of goods sold. And when you subtract your cost of goods sold from your revenue, you've got your gross profit. Now the only thing left for the financial budgeting becomes your SG&A expenses as well as your capital expenses. And then in this CPM model, and these are the kind of things that you can do with CPM, you push that budget into your financial modeling so that you can report actual against budget. And here's where the real value of that comes in is quarterly, if you need to reforecast because business has changed dramatically, you change your sales forecast, or if something's changed in your production model, you've become more efficient, or maybe you've outsourced, you can change one of those models and then tell the CPM system to recalculate, and now you have a new version of your plan. So you have a forecast based upon actual numbers plus what you've come up with the new model. And so if you think about what it would take to do that with an Excel workbook or multiple Excel workbooks, the value starts to really become apparent. Now, as we look at the budgeting process, okay, because we talked about building those models in CPM, and so here we look at a budgeting process, and you think of the person on the left there, probably pretty common. This time of year, a lot of the calendar year budgets are wrapping up, and people are so thankful they're over. And the budget process is really you load the data. So first of all, where do you get the data from? Does IT have to provide the data for you, or is it something that the finance department, since they're usually the ones tasked with it, can get to? Then you have your template distribution. Okay, what's that look like? Well, you have to segregate. If you're loading data as a starting point, you segregate the data into the different templates, and then you have to either put them into a secure shared folder on the network or email them out to people. Okay. Now, if you're putting them in a shared network folder, you have to make sure that any new users have appropriate rights. You have to have a backup in case someone deletes their workbook. And then you can get into the entry phase of it. Now, with an Excel workbook, once you send it out, you really have no idea of how far along the process they are. And then when they turn it into review, again, what does that process look like for the average user? They copy it back into a shared folder. Okay. You pick up those workbooks to merge and to review, and after you pull theirs in to merge it with everybody else, someone else makes a change to it. And so now you're not working with the same data they are. So it becomes a very tedious and risky proposition. And then after you put it all together, you have the board presentation, so you have to reformat reports and get it into a form that the board's ready to see. With the CPM product, by comparison, this is all automated. Integration pulls data from the multiple data sources and feeds it into templates that you have designed one time and given access to users with security for their departmental access or security level access. They do the data entry, and you have the ability to look and see how far along on the data entry they are. You have workflow to manage the review and approval process, and then you build pre-built templates to report to the board. And you have more time, instead of manipulating data, to actually make decisions and do the analysis and add the value that finance departments so often want to, but they're busy with the data manipulation. Now, as we look at reporting, okay, now we have the same type of thing. You spend so much time loading and preparing the reports, you don't have the time to do the analysis and add your value, to really be the expert that you're being paid to be. Okay, with the CPM system, the key is the data warehouse. And we'll take a look at this in a little bit. But with that, where information, whether it's from your payroll system, whether it's from a cloud accounting system, whether it's from your local ERP system, maybe it's even your CRM system. Maybe that's where you're managing your sales activities in order to track it back to a KPI. Okay. You can pull all that data into the data warehouse and report off of it. So there's no trying to build multiple workbooks to tie all this data together. So you have less time loading the data from all the different sources and more time adding value. Because here's one of the things that the Adobe CFO said not too long ago, and he says, I don't want my data analysis staff to be manipulating data. I want them to help us make decisions. So as we look at really a very basic architecture for the CPM system, how does this work behind the scenes in order to make it happen? And as we look at this, what we have is we see that we have multiple data sources. Okay, and this can be from any database that you have available. There may be some additional steps depending upon the CPM system that you're working with. to extract the data. It can be from a cloud software, whether it's an accounting, ERP, or a CRM system. But you load the data into the data warehouse, and that's the key, because the data warehouse provides you that single source of integration where it takes all of this disparate data and puts it into a format that can be read and the data can be easily combined. Okay. And then out of that data warehouse, you can do your reporting, you can do your budgeting and planning and forecasting and modeling, and you can provide executive reporting through dashboards. And so the highest performing companies are able to bring all of their data sources together in order to get an enterprise view of the entire activity. So just a few things, some quotes from some CPM users from products that we'll be talking about here shortly. Highlighted some of the real keys. Okay, collaborative use of budgeting templates has resulted in consistency across departments. Okay, you don't have users helping, and I say that in quotes, by adding their own calculations. Raise your hand if that's ever happened to you. Okay. We were able to consolidate, review, and revise departmental budgets in a way previously not possible. Okay. And that's because you're letting the system automate and control the input and the distribution. Okay. In the middle column here, okay, we need access to data without total reliance on others like IT. One of the keys of a well-developed CPM system is that while there may be some IT involvement in getting the database connection set up in the beginning, a good CPM system is owned by the operations department using the model. So finance department or sales or distribution, they're the ones that are building the models. They're the ones that are maintaining them. And so there's no IT use. Okay. If you've got an FP&A staff to help with that, they're the ones that own the model. They don't need significant input from IT. Okay. Here's another one. The application significantly streamlines the period and close procedure, saving hours of valuable time. I have one of my customers that they produce all their financial statements in Excel. And they have one workbook, and it takes it 45 minutes to calculate. And they said that it's worth taking 45 minutes to recalculate because then when they need to present it, they can print it to PDF and print the entire workbook, and then they distribute it to their 25 board members. Okay. But then they also have to print departmental financial statements for 15 departments, and they have to print the statement and then change the parameter, run it again, print the statement for another department, and that just producing financial statements for them takes over 4 hours in order to get all of the departmental and presentation material put together. And that's where you can see in this, the last comment here, we can run our financial report package in 45 minutes instead of 24 hours. And then here's the key. Our finance department can analyze the results in more detail and publish reports 2 days faster. That's real value because you're getting more timely analysis and getting more timely data to the end users. So that's a quick look. The overview that I had for CPM. We do have some time now for questions and answers. So if, as Alex said earlier, if you have some time to go ahead and type in your question to us and let us know how we can fill in any of the gaps we haven't covered, then we're more than happy to do that.
We do have a question here, Dennis.
Okay.
What kind of data sources can be connected or imported?
Yeah, that's a good question. And I talked about from your ERP system or cloud. Generally, there are a couple different requirements. It's either going to have to be a Microsoft SQL database or a text file. And if you're running any software that's not a Microsoft SQL database, then there are utilities out there where it can be converted. The data can be exported and extracted from that database, put into a staging database, if you will, for import into most nearly all CPM systems.
Okay. We've got another question here. Are the CPM products cloud-based or on-premise or both?
Well, that's a great question, especially because of the move and as everything seems to be moving to the cloud and the emphasis on a cloud offering. Right now, most of the CPM products that we deal with or are familiar with are offering both a cloud solution and an on-premise solution, simply because there's still not a 100% or high enough adoption rate for a cloud-only solution. And so they are offering both the cloud and on-premise.
Perfect. Okay. I've got another question here. How does a CPM work if I don't budget or have models?
Well, at that point, you really get the value out of a CPM system by automating your month-end close and the reporting of it. One of the things that I really didn't talk about, but CPM works well for and adds value in the finance department, is consolidations. So if you're working with consolidations and you have to do your eliminations or even currency conversions for international transactions or subsidiaries, then the CPM system is going to provide you with those capabilities as well. And so you really start to see the value of the CPM by making your reporting more efficient at the month end.
Okay. Got another question here. Will the CPM products handle multiple entities?
Yes. That's I just touched on a little bit. You can build a CPM models so that you can report from a single entity or multiple entities. If you have a company with multiple divisions or departments, you can run consolidated models at the company level or individual division or department models as well.
Okay. His question, does algorithm help with the budgeting process?
We do. If you've not started a budgeting process or you've implemented a budgeting process and you think that there has to be a better way because no one would do it consistently in such a painful manner, then we are more than happy to work with you on developing an efficient and controlled budgeting process. And even further than that, because if we go back and we think back to the slide with the high-performing companies, it started with strategic planning and modeling. If you need help with any of that, whether it's the strategic plan, whether it's modeling, the budgeting process, then Algorithm's got the resources to help with any phase of that.
Okay, perfect. Really appreciate all the great questions. We've got another one here. Can the CPM products be used to load historical data?
Yes, they can, and that's one of the benefits of CPM is that it can model any data that's available. And I actually have clients that we've gone back and we've loaded 5 years of history so that they can see trends in their business. The one caveat that I will put with that for full disclosure and transparency is that depending upon the CPM product and its technology, if you load too much data, it's like any other system, it's going to suffer performance issues. So that's something that as we're working with implementation, we start to see those type of requests, and then we start to have the conversations about data value and whether or not the data that's being imported is really relevant, because we want to make sure that everything about the system is providing value.
Okay. Just a personal question from my end here, Dennis. I know this is, as we touched on earlier, a big focus for us is we see a lot of value for customers who don't have this. So branching off of that, just curious why a lot of companies don't currently have CPM. Is it just a lack of awareness of these tools?
Well, that is a good question, Alex. And if you read the articles about the slow adoption rate of CPM, now that we really think that it's been part of a lack of education, and it's also been part economics. CPM as a real market segment in the software industry, if you will, really came about in 2009, which, if you'll remember, wasn't the greatest of economic times. And so a lot of companies held off adopting any new software until they can make sure that the ship was righted and ready to go. And during that time, CPM vendors probably didn't do the best job in educating the public in it. But now that we've started to see some economic progress and expansion, and we've seen more and more companies start to look at technology investment, and financial planning and analysis has become more widely accepted and seen as a value driver in the organization, then CPM systems have started to generate some momentum and some energy.
That makes sense. Last question here. Do you see any evolution in CPM, any trends that are noteworthy?
I really do. I don't think it's something that you're going to be seeing in systems, in the next 6 months or a year, but probably 2 to 3 years from now, I think that you're probably going to see some introduction of artificial intelligence and even possibly machine learning introduced into the CPM systems, so that those tedious type of tasks that are typically resolved or to the end user, that if you think of, say, balancing the accounts at the end of the month, there are some of those reviews that can be done through an algorithm, no pun intended, in order to make sure that the accounts are balanced and identify any unusual variances in activity. So I think that you'll start to see that introduced into CPM systems, so that instead of an account-by-account review, the system will do that and then notify the finance staff of any outliers that need investigation. So I think you're going to start to see those type of things coming into play in the CPM world.
Wow, very exciting. All right, I don't think we've had any new questions come in from our attendees. Anything else you'd like to add, Dennis, before we wrap up?
I just want to thank everyone again for taking time this afternoon, and really hope that if you have questions about CPM, improving your planning, budgeting, forecasting, and reporting processes, that you'll reach out to us, and at least let's have the discussion. Because one of the things that you'll never know is there a better way unless you take a look.
Very well put. All right. Well, appreciate all of our attendees today. Thank you very much, Dennis, for that great presentation. I think we all learned quite a bit from that. As I mentioned at the beginning, this has been recorded, so we'll put a copy of this out there for you all. And also, when we close down the webinar here, there is going to be that survey that pops up, and would strongly encourage you to complete that. Feedback is much appreciated. So with that, thank you all again, and we look forward to seeing you on the next algorithm webinar. Appreciate it, everybody.
Thanks, everyone.